All right, hello everybody. This is Drew, aka Catching Rockets here. I wanted to do a video today on the 9 EMA VWAP cross. I'm going to try to make it as short and as sweet as possible. We'll go over what the 9 EMA VWAP cross is, how to take the trade, and then at the end of the video, I'll do a little bit of back testing so people can see. Yeah, so anyway, let's hop into it. Basically, you're going to be using two different indicators. One is going to be moving average exponential. The length is going to be 9, so 9 EMA. The second indicator is going to be your VWAP, and you want to do this with extended trading hours turned off. So this is just regular trading hours. So what we're looking for is, I'm going to turn off my candles here. We're looking for the 9 EMA to either cross below the VWAP or cross above the VWAP. When it crosses below, we're going to be looking to take puts. When it crosses above, we're going to be looking to take calls. In this instance today, we were in puts. So right now, 9 EMA crosses below the VWAP. Once that happens, you want two candles to close below the VWAP before you get into a play, or two candles to close above the VWAP if the 9 EMA is crossing above the VWAP. So right now we have one candle closed below. I'm using 3 minutes. You can do this on any time frame. I like to trade on 3 minutes. Yeah, for people that, like 3 minutes is for scalping or day trading, quick in and outs. So we'll play this forward really quick. So right now, like I said, we have one candle closed below the VWAP and the 9 EMA is below it. So right here, we get our second candle closing below the VWAP with the 9 EMA below it. One of two things happens here. Our entry can either be below the low of this candle or safer below the low of this candle here. So let's keep playing this forward. Oh, and I should also point out this, anybody trading today knows this opening range is just brutal. Like there isn't much of anything happening. SPX is trading in a 10-point range from 295 to roughly 286. So 11 points, give or take. But 11 points on SPX is really not much. You can, scalp calls from the bottom to the top or play puts from the top to the bottom, but there isn't very much room to make money. So for a scalper here, you can probably make $100 per contract playing bottom to top, top to bottom, bottom to top, and so on. Anyway, just wanted to point that out really quick. So let me get rid of this box so it's easier to see what's happening here. So the next candle didn't cross below our entry. So we'll just let this keep playing out. So now we have a candle that closed above the VWAP. So now we're going to reset our entry. We want two candles to close below the VWAP and then for our trigger to hit. So right now we don't have an entry at all. And we're still in this tight, 10-point range. So here, candle closes below. Now we're going to be waiting for our second candle to close below. And we've got it here. So same thing, we pulled back above the VWAP here. So we no longer have an entry. Looks like this candle is going to close below it. And here's our second candle closing under. So our entry becomes below the low of this candle. I believe this is where we finally get our trigger. Yes. So the replay feature on TradingView, it looks like there's no way you can catch this trade, but it was very easy to get into at the time. On SPX, I took today's, so 8/16, 42.65 puts. They cost me $3.70. And my goal was to make $2 per contract, so $200. We'll keep playing this. And boom. So quick in and out here. And if we look at the contracts on SPX here, this is a live chart. So what I've done here is on Thinkorswim, you can chart the actual contract. So you can see this is 08, so August 16th put, 42.65, and this is the value of that contract basically at any given time today. And so if we look here, my entry, this was 7:27 Pacific time, which works out to be 10:27 Eastern, or the time of the stock market. So we can go to 7:27 is going to be right here actually. So like I said, I paid $3.70. So I got in puts right here at $3.70. And they went to a high of $5.80. And I had already put in a sell order at $5.70. So I got my $2 profit. And like I said, this is, under 6 minutes of candles, so 2 3-minute candles. But my entry was, partially through this candle. So that basically covers the entire 9 EMA VWAP cross strategy. And then what I would recommend, like always, is backtest this for yourself. But I'll backtest a couple for people right now. So you can see. So this is yesterday on SPX. Sorry, make this bigger. So our open is here. The 9 EMA never crossed the VWAP up or down until here. Once we cross, so we crossed on this candle here. So this is our first close below, second close below. So your short entry would end up being here, but we retrace back above the VWAP, and the 9 EMA crosses back above the VWAP. That happens on this candle here. So our second close above is going to be this candle, and we would be taking calls. And so you can see, once this triggers, it's a pretty easy run straight up. When you do take these plays, your stop loss is going to be a candle closing below the 9 EMA. So technically, if you took this entry here, you could play this all the way up, because we don't get a close below the 9 EMA until right here. And if you've paid attention on prior videos of mine, right here we actually have a bull flag. I'm not going to cover bull flags extensively in this video. I have other videos on it. But if you're paying attention to that video, and we use our fib retracement on the bull flag here, our exit is going to be the 272 level. So you have the confluence of the 9 EMA cross here, take your calls. We bull flag, take the break of the bull flag here, and you hit that 272 level. Another alternative is, you take the 90 EMA cross here, play it up until you start to see downside, exit your calls, and then notice that there's a bull flag setting up here. And you take your long entry here and play it up to the 272 level and get out right there. And as you can see, we basically hit the 272 on the dot. This candle wicked above it a little bit. This one as well, but it's a pretty clean entry and exit. Did pull back below the trigger, depending on what trigger you're taking. If you took this trigger here, well, yeah, it still pulls back below. Yeah, so it doesn't really matter. But you shouldn't be getting stopped out on this small pullback below the trigger here. So another nice clean trade there. Let me just delete this stuff really fast. So let's look for more. Sorry, all these drawings are going to drive me nuts if I leave them on here. Oh, and then so we get a short entry. Is this the same day? Oh no, this is today. Sorry. We already did this one. So we'll have to go to the prior day here. And this opening was pretty choppy as well. So our 90 EMA crosses above the VWAP, right? We don't have a candle close above. We actually pull back below the VWAP. Here we cross back above, and this candle closes above, and then this candle. So our long entry would have been here. But I mean, we can already see we don't get a trigger here. Boom, boom, boom. So we actually pull back down below the VWAP. We have the 90 EMA cross into the VWAP and then back above. We have a candle close above here. Or actually, I'm sorry. The 90 EMA didn't cross back above until this candle. And so we have a close above here and a close above here. So two candles. Our entry would become this. And, you get a decent move. It's not huge. I mean, if you stayed in, you're making bank. But from here as your entry, 42.36, we'll just say to here, 42.45. This is like at least $1.50, maybe $2 move on SPX contracts. So just these few candles here. If you have brass ones and you held it, like you're talking about probably $1,000 plus on this entire move. So anyway, on to the next one. So far we haven't had, we haven't been faked out if you're taking these trades. So 90 EMA crosses here. Yeah, this candle, first close, second close. Our entry would be here. Boom, play it up. Again, money. And then 90 EMA crosses below. So it looks like this candle. Sorry, let me just replay. Oh, I don't want to do that because... Yeah, so looking at it, it's on this candle here. So this is our first candle closing below. This is our second one. It looks like this one would be a fake out. Or depending on how you want to look at it. It gives a small move, but it's pretty sketchy. Like our entry triggers here, and then we pull back pretty good. And then down. Let me see, this is like 42.27 to 42.22. I mean, you're looking at probably at least $50 on a contract here. And then we come back. We finally do get a bigger move down, but at this point, theta is probably eating you up. So this one, we'll just say is a small win. You shouldn't, I mean, if you did stop out, I would understand. So possibly a loss here, or possibly a small win, just depending on you as a trader. This one we already went over, yeah. All right, so let's look at the next one. Cross below here, we don't get a trigger. This would be our entry below this candle here. Come back up. Where do we cross here? This candle, second candle. So our long entry would be above this red candle. And again, this is money. And then we cross again here. This one's probably good for swing trades, like if you're using a higher time frame candle. But we cross here on this candle. Yeah, so our entry would be here. We're looking at 4202 to 4212. This is almost a 10-point move. We'll call it 8 points to be fair. This will pay you. This is over 100 per contract. So happened twice on this day and gave us at least $100 each time. So hopefully you guys are seeing so far this is consistent, and it will pay you. So here we cross below on this candle. This one would be a fake out. So our entry would be here, and we would get faked out. And you would close out when you cross back above the 9 EMA here. Or a candle closes above the 9 EMA would be your stop loss. So I'm going to stop there. I highly recommend backtesting this yourself. And I think you'll see it will pay you pretty consistently. No system is going to be flawless. I specifically wanted to show at least one loss in backtesting. But I think if you go back further, you'll find, 8 to 9 out of 10 times this will pay you. And 1 or 2 times out of those 10 times, you'll take a loss or maybe even a small win. So it's pretty consistent. This is a great trading style for, somebody that's newer or is learning how to trade, like naked charting, POCs. And this can also be a great confluence point to add into your POCs and what have you. So anyway, that's going to do it, everybody. Much love. Take care. I hope you're all doing well. I hope you had a good day trading today. And I hope this helps some people out. Take care.